So in the previous lecture, we have studied different types of variances, and I asked you to practice the direct material variances. So in direct material variances, today we are going to do their practical examples. And first, let me open a question for you, and we will do that question. So let me open the question. So here's the question. Let's revise what you had studied already. We have to see in the question if they have asked us for material variances, right, direct material variances, then we have to see that whether material purchased is equal to material consumed or not, right? If material purchased is equal to material consumed, then you are going to use these formulas, and if it is not equal to that, then you are going to use these formulas. But let's see if they are equal, what is going to be the scenario. So here is the question. This question is solved in the other way, but we are going to solve our question in the way we have learned our formulas, right? The formulas are going to help you a lot. You don't have to think and what did actually cost and what did all those things, right? So this is a very easy approach with the formulas. Let me zoom this. Yes, here is the question. Okay, so we actually, let's see, what we have to calculate is direct material cost variance, right? Now I have told you that to calculate direct material cost variance, you have two approaches. You add material price variance plus material usage variance, right? Or the other one is standard cost into standard quantity minus actual cost into actual quantity, right? Now a very important thing that you should note over here is that when I say standard quantity or when I say standard cost, these both are for actual production, right? Not for standard production. These are for actual production. Standard cost for actual production and standard quantity for actual production, right? This is a very important thing. You have to note this down, right? This is not in the slides. So when I say standard cost or when I say standard quantity, it means I'm talking about actual production. Now, first, let's do standard cost into standard quantity, actual cost into actual quantity. Now, let's read out the question first. For Marden Manufacturing Limited, following information is given. Standard material cost per unit, right? They have said material cost per unit. Now, this is the standard data. 5 kgs are used per unit at the rate 1000 rupees per kg. Now this is in rupees, you have to bear with it, okay? Consider it as dollar. I've taken the question from somewhere else, right? Actual production in units in the period was 1000 units. Material purchased and used. Now look at here, the material purchased and used are same, right? 4850 kgs were used at the cost of this. Now per unit cost is not given. They have given you how many kgs were used in total and a cost of total cost. What did total cost, right? Now standard cost into standard quantity. What is the standard cost? It is 1000 per kg over here, right? It is 1000 per kg. So standard cost is 1000. Now what is the standard quantity? When I say standard quantity, I mean standard quantity for actual production, right? What is the standard quantity? It is 5 kgs per unit, right? It is 5 kgs per unit. And how many units are produced? 1000. So 5 into 1000 is actually the standard quantity, right? Then you have to subtract it from actual cost into actual quantity. Now this was our actual cost into actual quantity. this quantity when multiplied, right? You have purchased 4,850 kgs, and when you multiply it with your rate, you would get this answer, right? You would say that we have purchased 4850 kgs at this rate, and it cost us this, right? So this is a wholesome figure that you have to put over here, right? This becomes 5 million, and this as it is 4608000, and you get the answer as 392,000, right? So this is the answer. Now this was the first approach, right? Sometimes the data isn't this much clear. In this question it was very clear. Now, or the examiner can ask you about the price variance also. So about the price variance, let me plug in. Okay, so what we are going to do now is that we are going to do with the other method. So now for other method, we have this material price variance and material usage variance, right? So first let's do material price variance. Material price variance. Now what was the formula for material price variance, right? The formula was standard cost into actual quantity, right? Minus actual cost into actual quantity. Fine. Now it's very simple. You have to multiply standard cost with actual quantity. What is the standard cost? It is 1000 per kg, right? So we say 1000 multiplied by actual quantity. Now what is the actual quantity they purchased? It was 4850 kgs, right? 4850, right? Minus actual cost into actual quantity. Now what is the actual cost into actual quantity? It is 4608. 4608000. And when you will solve this all, what you will get the answer is will be 242,000, right? Now this was the material price variance. Now let's move on to the material usage variance. Material usage variance. The formula was standard cost into standard quantity minus standard cost times actual quantity, right? Standard cost into standard quantity, we have done this over here, right? Look at here. Standard cost into standard quantity, and the answer was 5 million, right? 5 million minus standard cost into actual quantity. Now standard cost into actual quantity we have done over here. Standard cost into actual quantity, this one. This becomes 4850,000. Now when you subtract this, it becomes 150, right? Now look at this. When we did material price variance, the answer was 242, and when we did material usage variance, the answer was 150. Now if we put it over here, material price variance was 242 and material usage variance was 150. and when we add both of them, it becomes 292, right? So sometimes in exams he can ask you only material price variance or material usage variance, or from this he can ask you to calculate direct cost variance. So these were the formulas and you should be aware of them, right? Now we are going to study another concept, that is about material usage variance, right? Now let's study it from over here. Material usage variance. Yes. Now you can see that material usage variance can be broken down into material mix variance and material yield variance, right? Now material usage variance has further two types of variances, material mix and material yield variances. And when you talk about material mix variance, it looks something like this and something like this. Now, in order to make this clear to you, let's move on to Excel, or I can do it over here also. Okay. Whenever in the question you would have to calculate the mix and yield variance, the first step, that note it down, right? The first step that you're going to do, you are going to draw three columns, right? First column would be standard quantity in standard mix, right? The next column would be actual quantity in actual mix, and the third column would be actual quantity but in standard mix. Now what does this mean? What are these mix, right? I am talking about mix, right? Whenever you will have two types of materials, let's suppose you make a product that is called product A, and product A is made from two types of material, that is X and Y. Fine. Now X and Y would be added in some proportion, right? Let's suppose you add 5 units of X and 2 units of Y. So this is the mix. This 5:2 is actually the mix in which you are adding the material to make product A, right? Now when you are actually making your products, when they are in process, this mix can vary, right? This mix can vary. uh, so what the mix in actual would be different, and what would be standard will be different, right? So this is what we call mixes, right? And standard quantity, you already know, standard quantity, actual quantity is the same. Standard mix and actual mix I have explained to you, right? Now let's see the formulas first. In the formula, it is actual quantity. Whenever you have to calculate the mix variance, right, what you have to do, you have to take the actual quantity in standard mix and then subtract the actual quantity in actual mix and multiply by standard rate. Then for yield variance, standard quantity in standard mix minus actual quantity in standard mix, multiply by standard rate. Now let's do a question on this, and then it is going to be more clear to you. We will do a question from your BPP. Fine. So let's go to BPP. Oh, my charger is... Okay. Let's move to BPP. Right, so you have to draw three... no, this is not BPP. Okay, so here is the question. Okay. Now in this question, we are going to calculate the material usage variance, material mix variance, and material yield variance. Now we have studied that material usage variance is made up of two things: material mix variance and material yield variance, right? Now material usage now let's see if um, let's read out the question first. A company manufactures a chemical dynamite using two compounds, flash and bang. The standard material usage and cost of 1 unit of dynamite are as follows: flash 5 kgs at the rate $2 per kg, and bang 10 kg at the rate $3 per kg. Right? This is the standard rates that they use. In standard, they use 5 kgs of flash and 10 kgs of bang to make a chemical dynamite. Right? To make dynamite, they have to use 5 kgs of flash and 10 kgs of bang, and these are the rates. In a particular period, 80 units of dynamite were produced. What is this 80 units? It is the actual production, right? This is the actual production. Now, from 600 kgs of flash and 750 kgs of bang, right? So in actual, they had put 600 kgs of flash and 750 kgs of bang, right? Now we are going to calculate material mix and material yield variances. So we can solve it over here, or we can move towards Excel also. Let's see. Let's do it over here. So we are going to make two columns. This phone is getting on my nerves. Hold on. Okay. So first we have to take standard quantity in standard mix, right? After that we have to take actual quantity in actual mix. After that we have to take actual quantity in standard mix, right? This is very important, okay? You have to practice it. Now, what is the standard quantity in standard mix, right? Standard quantity in standard mix is going to be this one, right? 5 kgs. What is the standard mix? Standard mix is 5 of flash and 10 of bang. And how many units are produced? 80. So you have to multiply it by 80. You can keep it simple also, right? You don't have to multiply by with 80, right? Or you can make this simple, the 600 and 750, but it is better, always better to multiply it by the actual production, right? So always multiply the standard quantity with actual production first. So 500 multiplied by 80 would be 80 multiplied by 5 would be, sorry, 400. It means 400 kgs, right? And then 10 multiplied by 80 would be 800 kgs. Fine. So this is flash and this is bang, right? For flash, 400 kgs of flash was the first 400 kgs of flash were used in standard quantity. They had estimated, and 800 kgs of bang were estimated in standard, right? Now what did happen in actual? 600 kgs of flash and 750 kgs of bang were used, right? 600 kgs of this and 750 kgs of these were used, right? What is the total now? This is going to be 1350 and this is going to be 1200, I guess. Yes. Now, in order to solve the third column, now look at this very carefully what we have to do. Look at this, what they are saying. We need actual quantity and standard mix. Now let's see what is the actual quantity. Actual quantity is 1350, right? Actual quantity is 1350. And what is the standard mix? Standard mix is 5 units of flash and 10 units of bang, right? Now you can simplify it into 1:2 also, right? So this is the standard mix. Standard mix is 1:2. So we have to multiply this actual quantity with the standard mix for flash and bang. Okay, wait. Flash and bang. For flash, we are going to take, now we are going to convert this actual quantity into standard mix, right? 1350 multiplied by 1, right? Because for 1 unit of flash, you add 2 units of bang, right? 5, because it is 5:10 over here. So 1 divided by 2, then 1350 into 2 divided by 3, right? Now let's see what are the answers. 1350 multiplied by 1 divided by 2 is 675, right? So this 675 goes over here. Then for bang, 1350 into 2 by 3, this is a standard mix, right? And this is the actual quantity. 1350 multiplied by 2 divided by 3 is 900. Sorry, I have done a mistake. This should be 3 over here, right? Because 1 plus 2 is 3. So 1 by 3 and 2 by 3. 1350 multiplied by 1 divided by 3. It should be 450 because the total was missing. It is 450 over here. 450 and 450. Now this is also going to be 1350. I was adding and the answer was not. So 1 by 3 and 2 by 3, right? Now we have got this. Now we are going to calculate the variances. Right? Now let's move towards the variances. Let's move to our slides. Right? We have calculated this from our question: 450, 400, 600, 750, 400, 800, right? Now for material mix variance, we need actual quantity in standard mix. What was the actual quantity in standard mix? Actual quantity in standard mix. So now we are doing for flash and for bang. We are calculated material mix variances, right? For flash, it would be actual, we have to take this formula for both, right? For flash and for bang separately. Actual quantity in standard mix is 450. Actual quantity in actual mix is 600. Multiply by the rate. Now let's see what were the rates, right? The rates are $2 and $3, right? Multiply by 2. Now 450 minus 600 is 150. Multiply by 2, it becomes 300. And it would be adverse, right? Because 600 is bigger over here. So it is 300 adverse. Now for bang, it is actual quantity, we have to take actual quantity in standard mix, it is 900. Actual quantity in actual mix is 750. Multiply by 3. So it is going to be 150 multiply by 3. So it's going to be 450, and it is going to be 450 favorable. This is adverse and this is favorable. Now let's look at over here. This is a very important thing. This 150 and this 150 are same. They should always be same, right? For both the materials, they should be same. Okay. So we have to do the same thing with material yield variance. We have to take standard quantity, standard mix minus actual quantity and actual standard mix and multiply by the standard rate, right? So this is the method. This is a very simple method. You don't have to think a lot for this, right? So this is the question that I did. Material mix variance 150, 150, right? When you multiply it by the rate, the answers would be, and look at the ratio, 5:10 or 1:2, right? Now, you have to calculate the yield variance yourselves. And there are different methods given. You don't have to focus on anything except what we have done, right? These formulas, when you will add material mix variance and material yield variance, they will get you material usage variance, right? So if the examiner specifies that you have to calculate the usage variance with the mix and yield variance, or when there will be two products, two raw materials given, then you have to apply the formula for mix and yield variance through that, okay? Otherwise, you can use this formula also if the examiner has not specified, right? Now, let us see the other also. Okay, so now this question is your homework. Material mix and material yield variance. You have to solve this question yourself. Give me a minute. So you have to do that questions. Let me show you this question also. Activity 3 and activity 2, right? Activity 3, and there was activity 1 also. So that is your homework. It's very easy. Then we have sales mix and quantity variances. Let's go to our own slides and formulas and see this. So for sale variances, the sale variance is very simple. You have to take the sales for sales price variance, and there are two sales volume variance, right? So for sales price variance, you have to take actual price into actual quantity sold minus sales price, standard price into actual quantity sold, right? Then if there's marginal costing, right? If there's marginal costing, then you have to take actual cost minus actual quantity. You have to take actual quantity minus budgeted quantity, multiply by standard contribution margin per unit, right? Standard contribution margin per unit. But if absorption costing is used, you have to multiply by the standard profit per unit, right? Look at here, standard profit per unit, profit per unit. But here you have to take contribution margin per unit, contribution, right? For marginal costing, you have to multiply by the contribution. And if absorption is used, then you have to multiply by the profit per unit, right? So, so we have sales variances. Before I had told you that uh, you have to do activity 2, you have to do activity 1, you have to do activity 3, right? So now we have sales mix and quantity variance. We go to our slides, we see that sales variances are over here. When you have to calculate the sales price variance, you have to do this: the actual price into actual quantity sold minus standard price into actual quantity sold, right? Then if marginal costing is used, then what you have to do for sales volume variances, you have to see that whether it is marginal costing or absorption costing. If absorption costing is used, you will take actual quantity minus budgeted quantity, multiply by the profit per unit, right? Standard profit per unit. But if marginal costing is used, you have to take the standard contribution margin per unit, right? This is the difference. You have to differentiate. But sales price variance is simple. You have to just put it in the formulas. Okay, so let's see a question. Now, if I, here's the question. Let's do this question. Let me zoom out. Let's read out the question, right? Just Desserts Co. make and sells two products, Chocolate Crunch and Strawberry Sundae. The budgeted sales and profit are as follows. Sorry, I had to pause the recording. So, Just Desserts Co. makes and sells two products, Chocolate Crunch and Strawberry Sundae. The budget sales and profit are as follows. For Chocolate Crunch, sales units are this much, revenue is this, cost is this, profit and profit per unit. Then for Strawberry Sundae, it is 300, 12,000, 110, 900, and profit is $3 per unit, right? Now, actual sales were 280 units for Chocolate Crunch and 630 units for Strawberry Sundae. The company management is able to control the relative sales of each product through the allocation of sales efforts, advertising, and sales promotion expenses. Now let's see, what do we have to calculate? We have to calculate the sales volume variance, sales mix variance, and sales quantity variance. For mix and quantity variance, we have to draw the same three columns as we had drawn in yield variance and volume variance for material usage variance. For sales volume variance, what we are going to do is that we had already studied the formula. It was over here. Right? Sales variances, right? So we have to see that whether it is sales for sales volume, we have to see whether it is the marginal costing or absorption costing. It is not mentioned, and we assume that it is absorption costing. Otherwise, if specifically marginal costing is mentioned, then you have to use this formula, right? It is actual quantity sold minus budgeted quantity sold multiplied by standard profit per unit. Now we are going to take this for both of the products, for chocolate crunch and for strawberry sundae. Right, for chocolate crunch, what we are going to use, what we are going to do is we will take actual quantity, actual quantity minus budgeted quantity multiply by profit per unit, right? What is the actual quantity for chocolate crunch? Actual quantity for chocolate crunch was sales 280 units, right? And the budgeted quantity was 400 units, right? Multiply by profit, and profit was 5, right? You have to take the answer. Then for strawberry sundae, it was 630 units was actually sold, minus budgeted was that 300 would be sold, multiply by the rate, that is 3. Sorry. Right? So let me calculate this. This becomes 600 and this becomes 990. Right? You can add both of them or you can take them separately, right? These are the volume variances, right? Now let's do our mix and quantity variances, right? Look at here, it is 600 and 990, right? And the total volume variance is 390 if you add both of them. Now we have to calculate the mix and yield variances, right? We're going to draw the column. Standard sales in standard mix, standard sales, actual sales in actual mix, actual sales in, you have to note this down, right? Actual sales in actual mix, just in standard mix, sorry. Right? What was the standard mix? It was 400 units and 300 units, right? 400 units and 300 units of the other, right? Chocolate crunch 400 units and strawberry sundaes 300 units. So in total it was 700 units, right? Actual sales in actual mix was 280 units and it was 630 units, right? 280 plus, now you have to add 280 plus 630 and it is 910. Now you have to take actual sales. What is actual sales? It is 910. What is standard mix? This is the standard mix. What is the standard mix? It is 400 and 300. If we simplify this, it is 4:3. Fine. Now 4:3, what we have to do is 400 multiply by 400. Now if we add, it is in total 700, right? 400 divided by 700, right? We have to multiply this with 9, 10, right? It is 520. Fine. Then you can do another way. 910 multiply by, this is what? For strawberry sundae, it is 300. We can take 3, or you can take 300 divided by 700. You can do either way, 3 divided by 7 or 300 divided by 700. It is same. You can simplify it, or you can keep it that way. It is 390. Now to counter check, we can add 520 plus 390. It is 910, right? So we have done it right. So this was, now let's see this was our working. Now let's calculate our variances, right? Now if you want to calculate the mix variances, what you have to do, we have to now look at here. Write this formula down. This won't be available in the PowerPoint, right? Whenever you have to calculate the sales mix variance, right? For sales mix variance, you have to subtract column 2, column 3 minus column 1, right? Look at here. Actual sales in standard mix minus actual sales in actual mix, right? Column 2 minus column 2, column 3 minus column 1, right? 3 minus 1. Actual sales in standard mix minus actual sales in actual mix, right? Multiply by, now you have to see what is it. It is marginal, then you have to multiply by contribution, or you can multiply with the profit per unit, right? Multiply by profit per unit, right? What is actual sales in standard mix? Actual sales in standard mix is 520. In actual sales in actual mix is 280. Multiply by profit per unit, it is 5. This was for chocolate crunch, and for strawberry sundae you will do the same. You will take 390 minus 630 multiply by 3, and this would be your answer of your variances, right? Now 520 minus 280 multiplied by 5 is 1200, right? This is favorable. 310 minus 630 multiplied by 3, it is 960 adverse. Fine. So this is how you do. Then for sales quantity variance, I'll just write the formula down. For sales quantity variance, what you have to do, you have to take these two columns, the third column and the first column. You have to do standard sales in standard mix minus actual sales in standard mix, and multiply with the profit per unit, right? So you have to put it in the formulas, and you can do that. Now this one was your homework. Look at here, it is 1200 and 720, 520, 280, 390, 630. It is 910. When you multiply it with the profit per unit, you get 720. And these are the answers. And then you have to do the same thing with the sales quantity variances, right? Then there is a method 2. You have to ignore the method 2. We don't have to look at any method 2. Now activity 4 is your homework, and that's it with the sales variances. There would be questions. You have to solve these questions. You have to give every question 4 minutes, right? And these are the marks allocated. Then these are section A, A45, and all these, the sections are named already. This you have to do from the practice kit, okay? And this would be enough for your preparation. So that's it.